Okay. If you guys are just tuning in, we're about to go live here for my Friday night weekly wealth creation course. We're just waiting for Facebook to catch up and load. If you guys are joining here tonight on Instagram, on Zoom, on Facebook, we're going to have this up on YouTube as well. I want to welcome you all. I do these every single Friday. I'm excited about this week because we're talking about something called phase 3 of financial freedom. And phase 3 of financial freedom is where we start to invest. Okay, it's where we start to actually look for passive income producing opportunities. It's where we begin to do a lot of the things that I see people romanticize about financially. Romanticize meaning that they kind of focus on like, man, I can't wait to invest. I can't wait to have passive income. Can't wait. That's what I see on phase 3. And so what we're doing here tonight is we're going to cover what does it look like? Okay. What does it look like when we're there? How do we get there? We've covered some of the prior steps, which I'm going to review a little bit. And essentially, I want to show you how to do this step so that you can actually build financial freedom. Now, if you're watching this tonight for the first time, my name is Jerry. I'm the owner here at Wealth Dynamics. We're a company that helps families, individuals, business owners, entrepreneurs become financially educated and wealthy so that they can navigate their economic futures with certainty and help build more prosperous communities around them. I don't think politicians can do it. I don't think government's going to do it. I think that it's up to us. Okay, it's up to us to learn how the money thing works, take responsibility to get our progress going in the right direction, have a plan, build wealth, help our communities, help our friends, help our families. That's the purpose of wealth. Okay, one of my favorite guys to look at with this, his name is Andrew Carnegie. If you don't know who he is, Google him. At a certain point, Carnegie was the wealthiest man in the United States. Okay, him and John Rockefeller, they battled for that position. Carnegie died broke. Not because he was penniless, like because he's a bad, money guy. It's because he literally gave all of his money away. Like his entire life goal was to become the wealthiest man in the world and then give it all away. He did that. He did exactly that. That's what wealth is about, guys. So as we're talking about this tonight, I want you to think with that future. Okay, not what I've seen on TV and Wall Street and all of this nonsense about evil money grabbing greedy people. Like, what would I actually do if I had wealth? I'm a good person. I believe you're a good person. I think if we gave you wealth, we gave me wealth, we'd probably do really good things. And that's why this matters. That's why we teach these courses. So a little bit about my background. I didn't grow up with any of this information. I was talking to a guy yesterday and he was just starting to get some basic information on finances. So I was sharing a lot of like concepts and breaking it down for him. And at one point he stopped me and was like, so where did you go to school to learn all of this? And I was honest with him. I was like, I didn't go to college. I did high school. Okay, I was a financial advisor. So I took, 3 or 4 federal and state licensing exams. That didn't teach me any of the stuff I'm talking about. I had to go learn this stuff. I had to go study the wealthy and find out what are they doing? Why are they doing it? How are they doing it? And actually get all of that data for myself. Okay. And so when we talk about this, like tonight, I'm bringing this information to you because it's something that I had to really search for. And it took a lot of time and a lot of money to get it. So I want to give that information to you so that you can have it and start to use it in your life. Okay. So couple of ground rules as we cover this. As we're going through this tonight, we're going to talk about investing and some other very exciting things. But some of it's going to have maybe some language or terminology that you might not be familiar with. I wasn't when I first learned it. What happens is a lot of times when we're learning something, if there's information in there that we don't understand, words we don't know, definitions we're not sure of, we end up tuning out or zoning out. And the ultimate result of that is basically we don't end up getting the information because we quit on it. We're like, I don't know what that means. I'm going to check out now. I don't know what that means. I'm going to start cracking jokes in the comments. That's the kind of thing that happens. And so instead of that, what I want to lay down as a rule is if there's anything you don't understand, I want you to let me know. So as we're talking about investments, as we're talking about finances, as we're talking about different places that people can put money, if you come across a word that I say, I want you to let me know, because what I used to have happen to me when I would learn this stuff, especially when it was live communication with somebody that I knew had more knowledge than I did, if I didn't know something, I felt embarrassed. And then I wouldn't ask because I was too embarrassed to let them know I didn't know. And then I would just go on never knowing. And little did I know, most of these people, if I would have just said, hey, not to be naive, but I don't know what blah, blah, blah means, they would tell me. So I want to have that agreement with you guys as you're watching this. If you feel that way, ask your question in the comments. I'll answer it. If you have a word you don't understand, look it up, ask me. I want to help out with that stuff. Second thing is these are streams we do on finances on a Friday night, which means the only people watching are those that really, really care about finances, or those that just don't have a life on a Friday night and have nothing better to do than troll somebody on Instagram or Facebook. If you're the latter group, this feed is not for you. This is for positive people that are interested in improving their financial condition. And so I don't want to see any critical remarks, making fun of people, inappropriate stuff in the comments. Like that's really just not respectful, not cool, right? And so I want to have the agreement from everybody that we're going to respect everybody here. We're going to realize that there are families, there are individuals, there are entrepreneurs, there are people watching this that want to learn. They come here every week and they learn. And so to interrupt that because I don't have anything better to do is kind of stupid, right? So let's just make sure that's brushed off on the side. That's not something we're going to tolerate. And then thirdly, ask your questions in the comments. Most of your questions I'm going to answer at the very end. Okay, so drop them in the comments. I would love to answer them for you. I always will get to them. And essentially, we're going to dive into it now. So guys, what I want to dive into, I'm going to share my screen here for you guys on Facebook. And Instagram, I'll flip you guys in around in a second so you can see as well. I want to go into what are the steps of building wealth? What are the actual steps? Okay, and before we go into the steps of building wealth, I want to kind of define what is wealth. Okay, what is wealth and why is it something that we need to actually define? So for me, there's two different definitions of wealth. Okay, general definition is abundance and prosperity in all areas of my life. Okay, all areas of my life. When you go back to the word wealth and you look at the root of where that word came from, it's a German word, and that German word is Wallon. Okay, and the word Wallon or Wallon, depends on how you say it. It's probably with a V sound because it's German. It literally means like well-being, like welfare in all areas of life, and not welfare like a government welfare. I mean like welfare, like you're doing well, you're faring well, you have abundance everywhere. Okay, so someone that had wealth was considered to be well in all areas of their life. So that's why for me, that's a definition, a general definition of wealth. Now, a tactical definition that we're actually going to use to build is going to be passive income that exceeds my expenses, savings, and taxes. Okay, I've talked about this equation before, passive income that exceeds my expenses, savings, and taxes. I was talking to another guy last night that he's making a lot of money, has successful businesses, more power to him, but he's not wealthy. And he was kind of asking me like, well, I'm trying to figure out, do I keep investing in my business or do I start doing these real estate deals or what do I do? And I let him know like, hey, get your passive income first. Okay, don't do Bitcoin, don't do Forex, don't do any of this, like get your passive income first. Okay, he's past the point where he's got his debt paid off, he's solving, he's got reserves, he's got cash, all of that's taken care of. He's at the point now where he's saying, I have excess money, what do I do with it? Okay, so passive income first, and we get that to the point where it exceeds expenses, savings, and taxes, then we start doing other stuff, right? Then we start getting into more speculative things. So that's kind of the focus and goal. And the idea behind wealth is that all of us have like desires and goals and dreams for our life. The reason why they're not there is money. That's the main reason, right? Like I can't do all of the things I want to do unless I can afford to do them. Okay, and that's not like a statement of like you're poor and you're doomed, yada yada. It's none of that. Like there's not a wealth inequality speech. This is literally everything takes money. So for me to say I want to have abundance and prosperity in all areas of my life, and then just also not acknowledge that everything in life requires some amount of money, I need to understand how much money is required for me to have abundance and prosperity in all areas of my life. Because if I can't pay the bill for that, then I'm not going to have it. So I've got to have both of those things. Okay. And so we're looking at, I need to be able to fund that kind of lifestyle. Wealth is abundance and prosperity in all areas of my life and the funding to do so. And that's why we have the passive income tie-in. So that's like the brief description of like high level, what are we trying to accomplish? Okay. Now, when I first got into this, as I said before, I was fixated and hypnotized and interested by the magic of wealth. I was like, I'm reading Robert Kiyosaki and I'm watching Grant Cardone stuff and I'm studying all these books from these people about being an investor and buying my first fourplex and flipping and all of this stuff. But I wasn't there yet. I didn't have the money to go do any of that stuff. Okay, I was broke. I didn't have enough money to pay my bills next week, but I was sitting there learning about how to do my first fourplex. There's some kind of disconnect there, right? You can't look at the individual and say that that's a logical thought of I'm broke, but I'm going to go learn about fourplexes, or I'm going to go learn about flipping, or I'm going to go learn about multifamily real estate deals that I have to be an accredited investor, AKA a millionaire, to invest in the first place and have 100 grand. That there's something not computing. It's like a calculation that skips equations. Okay, I'm not going to go from broke to there. Okay, I have to go through and actually work my way up to that level. So that's why we came up with the blueprints of financial freedom. And I'm going to flip Instagram around really quick because I want everyone to be able to see this. So again, we talked about this on prior weeks. We talked about phase zero. Okay, phase zero was gaining financial freedom from the past in order to have the ability to create a financial future. So we talked about having control over my income and expenses. We talked about knowing what money actually is. We talked about earning income and actually having more income than my expenses. We talked about getting rid of consumer debt. We talked about having credit worthiness and actually being able to be able to have credit that helps me instead of hurts me. Okay, and then we moved into phase one. Phase one was gaining present time financial solvency. That's again assets exceeding liabilities. The things I owe are worth more than the things I own are worth more than the things I owe. And then my income exceeds my expenses, and then I can pay all of my bills and obligations. That's phase one. So we talked about again the sacred account, putting money aside in that. We talked about ensuring your income, making sure that your risks are covered. Okay. And then last week we talked about gaining freedom from the financial traps created by Wall Street, central banks, and government. So we talked about things like the 401k, the mortgage. We talked about loaning money from banks and borrowing from banks. We talked about taxes. Like these are all things that we dove into because when somebody becomes solvent, all of a sudden they are a target. Okay, I live in Alaska. In Alaska, in the summertime, we have really bad mosquitoes. And mosquitoes like plump people. They like people that have lots of blood and things to suck. And so at that point, financially, if I'm here, I become a plump person. And these are all mosquitoes. Okay, these guys want my blood. These guys want to take my taxes. They want to take my fees. They want to take my interest, and they want to leave me sucked dry of all of the life that I have while they're fat and living off of it. So I review this because what I'm about to cover tonight, phase three, does not matter and does not apply if an individual has not done phase 0, 1, and 2. Okay, I'm going to say that again. The person that is doing phase 3 that has not done phase 0, 1, and 2 is not going to succeed. Okay, this information you need to get there first. I'm going to cover it anyways because I want you to know what it looks like. And I want you to understand it. If you're there, I want you to be able to take action, but realize I'm not going to have the conversation of you investing if you're in debt or you don't have solvency or you don't actually understand money. Okay, so that being said, what is phase 3? Okay, phase 3 looks like this. I'm going to zoom this in for Instagram. Okay, phase 3 is gaining incremental freedom of time by use of passive income producing assets in order to build compounding cash flow. That's what phase 3 is all about. Okay, gaining incremental freedom of time. What does incremental mean? It means bit by bit. It means that little bit by little bit, I'm going to keep swinging and hacking away until I gain more and more and more freedom of my time. I'm going to gain freedom of my time by utilizing passive income that I do not trade my time for, being produced by assets, things that I own, in order to build compounding cash flow. What is cash flow? Cash flow is surplus money that I have in abundance beyond my expenses. And if it's compounding, it means that it builds upon itself. That's what I'm creating here, okay? So on phase 3, there's 2 different levels. There's level A. Okay, this is actually investing. Level A, I've got to have 50 grand to be able to do these. This is investing. And then level B, which is getting to a 40% savings rate. We're going to talk about both of those things tonight, right? Now, let me flip Insta back around. So that's the topic tonight. And really, like on this level, and I'm going to unshare my screen too. On this level, this is where we start investing. This is where we start looking at these things. And basically, like, this is also the area where people prematurely jump into it. I see a lot of people that they get excited about being an investor and they skip, like I said, phase 0, phase 1, phase 2, and they go right into, I bought a fourplex because my realtor and mortgage broker who both make a commission on the transaction said it was a good idea. That's not good. Like, you're insolvent and now you own an asset that's really a liability, doesn't cash flow. Okay, so I really want to get that down. We're not doing stupid stuff with money prior to being solvent, prior to being out of debt. And then the other thing too is between phase 2 and 3, I want you to start self-financing your vehicles and your house. We talked about that last week as well. Okay, self-financing your vehicles and your house. This is part of phase 2 actually, but it can also be part of phase 3 where I'm starting to invest. Okay, when I say self-financing, I mean that I'm going to put money into a sacred account. I'm going to have that money growing at 3 to 5%. I'm going to borrow against that money at a 1 to 2% interest rate. And then I'm going to put that into a deal that is a car, and I'm going to make payments on my own car instead of paying an institution. My money still grows. I pay the car off. I own nothing. I write it all off of my taxes. And I end up making, I showed a guy today how he can make 17% a year on owning a car. That's a brilliant move because I'm not going to find an investment that makes me 17%. Okay, so I want to look at that really quick. Let's dive into that. So the first thing I want to show here is we're going to go over a compounding interest calculator. Okay, so let's say that I'm buying a vehicle right now. I'm in phase 3 or phase 2.5, if you want to call it that, and I'm buying my first vehicle. Okay. And when I say my first vehicle, I mean like on this program. We've all probably financed a car before. I'm going to show you how to actually make money on doing a car, right? So let's just use, let's use my BMW that I bought, $70,000 car. Okay, $70,000 car. I have put in this savings calculator. I'm going to flip Instagram around again. I have put 70 grand into my sacred account. Okay, we're going to do this deal for 5 years. Okay, let's say that my annual rate of return in my sacred account is 4%. Okay, and I'm not putting anything else into it. And that's basically at 5 years, my 70 grand will be worth 85,000. Okay, so what I'm saying is I'm going to take $70,000. I'm going to put that into my sacred account. I'm going to borrow it from my sacred account and then go use that to go buy a vehicle. Meanwhile, back at the ranch, my 70,000 is still growing at 4% a year. Okay, that's side one of this. Side two of this is that I borrowed, right? So I want to show you what this looks like. This is called the line of credit calculator. So I borrowed 70,000. Okay, if you borrowed 70,000, your loan gross rate is only going to be about 3.75%. On 70,000, I'm probably paying myself $1,400 a month. So let's go ahead and put that information in there. $1,400 a month on my car payment that I'm paying to myself. And I want to show you guys what this costs in interest. And at the end of the 5 years, let's say that my car is worth 30 grand or 35 grand and I've sold it at that point. Is that fair? Good. So essentially I'm paying an interest rate of 1.47%. I'm borrowing against my sacred account. I'm paying 1.47% to do so. It's costing me $5,000 over 5 years to borrow against my own account. Yet my 70,000 is now worth 85,000. And I have a paid off vehicle that's worth 30,000. Do you guys catching that? Like I have that here. I've got my 70 grand still at work, which is now worth 85 plus 30,000. Okay, if we do the math on this, 85 plus 30,000, what is that? $115,000. Okay, so if I do $115,000 on this, my return on this, let's look at a investment calculator really quick. I'm gonna have to kick Instagram off really quick. So on an investment calculator, if I have put in 70 grand of my own money, and over 5 years, I've turned that into $115,000. That's a 10.43% annual return on owning a car. Okay, that's insane, guys. For those of you, Instagram just cut out here. The return I'm making on owning my car this way is 10.43%. I've put in $70,000 of my own money. After the 5 years, my $70,000 we just looked at is worth $85,000, and I've still got the $30,000 value, $35,000 value that the car is worth. I'm making like 10, 11, 12% on this. This isn't even accounting it for the fact if I wrote the car off on my taxes. If I write it off on my taxes, I might save another 30% of the value of that car. Okay, so I might save another 21 grand. Then I'm making like a 12 to 15% return. The reason why I cover this is on phase 2, I might get trigger happy and I might try and do an investment deal that only pays me 8% or 10%, maybe, when I could go do this with my own vehicle and make 13 or 14% guaranteed. See, why would I jump into a deal that's not going to pay me out as much as my investments will in my own vehicle or my own financing of my own items that I'm gonna have to buy anyways? Here's the thing on the vehicle, guys. The alternative, I go to a bank, I use their money because it's a cheap loan. It's 2 to 3%, and I pay them $1,400 a month. And after 5 years, I've got zero left. I've got a paid off car, which is only worth 35 grand. I've got nothing at that point. I've got a $35,000 beater that I can probably only sell for 30 because nobody actually buys them for what they're worth. Or I've got 115,000. So what I'm trying to get at here is, like, a lot of times when we start getting into like phase 3 investing, I want passive income. People look at being an investor as a title, almost like a college degree. Being able to say that I'm an investor does not mean anything. Okay, it doesn't mean I'm wealthy. It doesn't mean I actually make money. It doesn't mean my investments are any good. It doesn't mean they're going to be there in a couple more years. Okay, so I have to look at this and realize that the bank thinks my car is a good enough investment to give me money for it. They're going to make money on it. Why don't I just take that position from them? I just showed you how to make 12% on your car, right? Let's talk about the house. Let's talk about the house, right? So this is the other thing you're probably going to do on like phase 2.5. Okay, if you're getting ready to invest, you're either renting or you own a house. Okay, if you're renting, you're probably going to buy a house because your friends and family and everyone else told you to, or your mortgage broker or your realtor that goes to church with you, or you already own a house. You did a loan at 3% down and you thought you were getting a deal and you're actually paying way more than you ever did when you were renting, but you justify it because you have a nice little backyard and you can say it's yours. Okay, I'm going to show you how to do this the right way. This is called a housing cost calculator. Guys, these are all things I do with my clients. So let's say that I'm renting right now. Let's say I'm renting and that I'm paying $1,800 a month in rent. Okay, and let's say that I'm paying $200 a month in utilities. Okay, and if I'm renting, let's say I'm paying $15 a month in insurance. My total cost of renting is $2,015 a month. Now, at this point, I'm looking at this and I'm saying, okay, I could be an investor right now. I could buy the fourplex. I could freaking buy a fourplex. I could buy a duplex. I could buy a triplex. I could flip houses just like they do on HGTV, and I could be like the people on TV, right? Or I could look at, I have X amount of money saved, and I'm going to put this into something and generate a guaranteed return on it. So if I'm going to do this with housing, I have a $2,000 cost to housing. Let's say that I go buy a new house. If I buy a new house and I can get my total cost of housing down to $1,500 a month, I can actually make my house an investment because it's reducing my monthly outlay. I'm now saving $500 a month on housing. Now, with this, we're using a loan called an all-in-one loan. It's a first lien home equity line of credit. I'm going to flip Instagram around again. So my interest only payment is $925 a month. And then my combination of other costs on owning a house, HOA dues, taxes, insurance, utilities, maintenance and repair, closing costs, realtor commissions, that's about $600 a month. Okay, so if I'm trying to drop my housing payment down to $1,500, $925 of this can be from a loan, $585 of this is going to be set aside for anonymous expenses that come up. It means that I can afford a total mortgage of $210,000. Okay, which means if I put down a 20% payment, I'm going to buy a house for $262. My down payment is going to be 52 grand. This 52 grand is going to yield me 12%. Okay, the reason this 52 grand is going to yield me 12% is because the reduction in my old housing cost versus my new housing cost is savings. That is money that I'm going to keep every month now. But the cost is 52 grand, right? So let's look at, well, if I have 52 grand, where else can I put it where I'm going to make a guaranteed 12% return? The answer is nowhere. I can show you private lending deals that might make you 12%, but again, it's not guaranteed. This is guaranteed. Your housing cost will be $1,500 when it used to be 2 grand. Okay, so these are little things I cover. These are little things I cover because what happens is we overlook these. We get so hasty about being an investor. right? And then we overlook smart financial decisions because we got sold on someone else's idea and someone else said it was a good idea and all of our friends and family did it. And so all of this stuff adds up to us losing out on money. Okay. Now let's talk about actually investing. Let's say, okay, we're actually investing here. We're actually on phase 3. We're ready to go. Okay, I've bought my own car. I've self-financed it, right? I did the house with the 20% down payment on the all-in-one loan. I got my payment down, $500 a month or so, right? Which is about a 25% reduction in housing costs. I'm ready to invest now, right? So let's look at this. In addition to my 6 months of reserves, my 5 months in my sacred account, 1 month in cash, I need 50 grand of investable cash. Okay, $50,000. Now, here's the sweet thing. My $50,000 is either going to be in my sacred account, or it's going to be in gold, or it's going to be in my line of credit that I got basically on my house just now, right? And so I'm going to look at all of these resources as places I can pull money from. I'm trying to get 50 grand. I'm going to pull it from my sacred account. I'm going to pull it from my gold. I'm going to pull it from that line of credit on my house that I just talked about. The beauty of this is that by doing so, my sacred account is still going to grow. Okay, my house is still going to grow. My gold is still going to grow while I use it. So I've got 50,000 here. And let's say that I had 50,000, between these 3 places. My sacred account is probably earning 4%. My gold is earning about 7%, right? And then the other thing that I'm looking at on this is that I have my my house as well. My house is appreciating. I don't know what your house is appreciating at, maybe 4 or 5%, right? So if we take 4 and let's say another 4, that's 8, and then we take 8 on gold, that's another 8, 16. We average that out. You're making about 5, 6% a year. Okay, 5 or 6% a year while you borrow the money, right? So let's say that I did do this. I take my money. Again, we're going to use this example, my 50,000, which I've just borrowed against my sacred accounts and my gold and my line of credit. And I'm paying an average of 3.75% interest. And let's say that I can make 12% a month on this, which is $500 a month. Let's look at what my total cost of borrowing is on a 5-year deal, right? This is going to be mind-blowing when you guys see this. So I invest the 50,000 for 5 years. At the end of the 5 years, I get my 50,000 back. What did I pay in interest to do that? I paid about 2.25, right? 2.25. Now the deal is, if I just made 50,000 at 12%, $500 a month, right? So I have $500 a month coming in times 60 months. Let's take a look at that math really quick. Calculator. Not calendar, calculator. So we have $500 a month coming in times 60 months. That's 30 grand in cash flow. Okay, 30 grand in cash flow, but we still have that 50,000 we borrowed still growing. So let's take a look at that. We have the 50,000 and we all agreed that we're going to make about 6% on this money over 5 years. So my 50,000 is now worth $66,911, the money that I borrowed against, right? In addition to that, I made another $30,000. Okay, so 66,000 plus 30,000, I made $96,911. Now, if I didn't use the sacred account and I didn't use gold and I didn't use any of these things that I'm talking about, I would have only made 30 grand. Okay, but we're saying is we had the 50 because we borrowed against it and it still grew. We made an additional $16,000. Okay, guys, that's an additional 50% return on my deal. Why would I give that up? Right? So a lot of this is about structure. When I'm starting to look at this stuff, I'm looking at structure. Okay. And so when I'm looking at structure, let me flip Instagram around here again. When I'm looking at structure, I'm looking at how do I maximize this 50,000? Okay, how do I maximize this $50,000? Because I could put it in a deal. It's going to pay me 12% and I could make just 30 grand, or I could put it in a sacred account and I could put it in gold and I could put it into my all-in-one loan with my real estate first and borrow against it and then make 30,000 plus another 16. We all clearly just saw that that happens. Mathematically speaking, that's exactly what we just looked at, right? Not only that, but if we look at this cost of interest that I paid, this little $5,800, I'm going to write this off on my taxes. That's called investment expense. Okay, this was my cost of borrowing my own money. So I'm going to borrow my own money, pay interest for borrowing my own money, and then I'm going to write this interest off against the income that I earned and not pay taxes on it. And I still make more than I would have made if I didn't use this mechanism at all, right? So this is how investing is done. When you look at real investors, like, and again, I study the top 1% of wealth. This is not your buddy that sells real estate down the road. This is banks and corporations and Fortune 500 companies and the top 1% historically. This is what they do. This is what they do. They earn money in multiple places at the same time. Okay, now let's speak to when I'm at this level, what type of deal am I doing? Because this is probably my first investment, right? So a lot of times my first investment, I'm not going to have my legs underneath of me on like, how do I invest and what assets do I look at? Like there's a certain little bit of, there's a certain bit of like expertise on just like, if I'm going to invest in property, I just have to know property. That has to be there. I can't just be like, hey, I've got 100 grand. What property do I buy? I could still lose money. So I have to have an expertise on property. I'm a business owner, right? So I'm gonna be honest with you. I don't have time to go look at fourplexes. I'm running my business. So when I get 50 grand, I'm not going to go put it into a fourplex because I don't have time to go study the fourplex. When the toilet breaks, I don't have the time to go fix it. And I don't want to pay a manager 10% of my gross rents for them to basically bill me an invoice and do it themselves. Okay, so where do I put this 50,000? These are called level 1 private placement investments. Okay, so what I'm going to do is I'm going to leverage a fund. Okay, a fund means a group of people that has investing experience, and they're going to let me be a lender or a partner on their deal. I'm either going to loan my money to them and let them use it for their investment, or I'm going to put it in the fund and be a partner with them. Okay, I typically do the loan option. Okay, so what I'm going to do is I'm going to take this 50,000 and I'm going to say, hey, I'm the mortgage. You're borrowing my money. You know what you're doing. I'm loaning you the money and you're going to go buy this deal that already pays cash flow. This is not development and speculation. And if we buy this and build this, it's going to turn. No. I want to see the deal you're buying has paid you already. Like in the past, this deal has been profitable. And if that's the case, and it's worth, 30 times or 30% or 50% more than what I'm putting into it, which means I have a 70 to 50% loan to value ratio, meaning if I loan them 50, it's worth around 100. Okay, that means that I have a lot of room. If they default and I foreclose and take that asset away, I'm going to make 100 grand on the 50 that I put in, right? I want that. So I'm looking at it from a lender standpoint. I'm the bank. I'm loaning you money. I want to make sure the thing I'm loaning it for is worth more than I gave you by at least 2 times or around 2 times. And I also want to see that it has income. And what's going to happen is you're going to pay me interest every month for using my money, and it's going to be 8 or 10 or 12%. And I'm going to do absolutely nothing. And people will do that. There are funds that do that. I have a fund that I work with so many clients on that's their game. They do that. They're fine with that because they know they can make 15. They'll pay you 12 because they can make 15. They'll keep the 3% spread. That's fine with them. Okay. But the beauty there is, guys, I don't have to go fix the toilet. I'm not spending time on it. I'm not worrying about anything. I can go back to my business and do the thing that made me have the 50 grand in the first place. This is so critical. As an investor, so many investors derail themselves because they do their first investment and it interrupts and stops them from doing the very thing that caused them to make the 50 grand to invest in the first place. If I'm a business owner and I go buy my project house to go flip, I'm no longer a business owner that makes money to do real estate. I'm now a construction worker. Construction does not pay very well. Most of these flippers, when you take the amount of money they made and divide it by the time they spent, they did not make very good money. Okay, they won't tell you that because they have to justify why they did it all in the first place. Okay, so basically what I'm saying here is when I'm at this point in time, I'm not trying to get a job as an investor. I want to truly be an investor. I want to have real passive income, which means if I do lending, which is my preference, I don't have to do anything. Like when you buy an apartment or you buy a house, the bank doesn't say like they want to be your partner. No, they say you can use our money and you're going to pay us every single month and we're not going to do anything. And if you don't pay us, we're taking your house away. So I want to do that because that's very scalable. Now I think about this like a franchise, right? I'm going to draw this out for you guys really quick. I think about this like a franchise for my own money, right? So when I look at the whiteboard, let me show you guys what I'm talking about here. So we have this thing with our clients we talk about called the triangle of wealth. Okay, the triangle of wealth, and it looks like this. I've got to earn money, I have got to save money, and I have got to invest. Okay, so if I have $50,000 here to invest, okay, that's a very ugly looking 50, but that does say $50,000, believe it or not. Okay, again, I have some ancient cave alien in my blood, and that's part of what that is that's my cave hieroglyphics. Okay, but if I had 50,000 to invest, that means at some point I saved 50,000. Okay, can we all agree with that? If at some point I saved 50,000, it means that I did something to earn enough money to have $50,000. So what is going to happen if I take this 50 grand and I invest it into something that interrupts my ability to go earn? I can't go here now because my new investment has just become my pet project, right? So I'm not going to earn more money. I'm not going to save $50,000 and I'm not going to do another deal because I don't have the ability to go repeat that action because I have bought a distraction. I did not buy an investment. I bought a distraction. The fourplex that I have to fix is a distraction. The flip that I have to spend time on is a distraction. The loan that I gave my buddy that he defaulted on is a distraction. Okay. The Bitcoin that I bought that goes up and down and up and down and up and down and up and down is a distraction. I want to put my 50,000 into something that will pay me every single month, no matter what. And it is not a distraction, and it will do that on autopilot. And I can go back up here and do the thing that made me the 50,000 in the first place so that I can do it again. This is my business owner hat that I'm thinking with. If I own franchises, like I said, I have this idea that investing is like franchising out my money, right? So if I have a thing that is producing dollars and is making all these little dollars, right? If I'm a franchise owner, this is called scalability, meaning it's repeatable. I can do it over and over and over and over and over again. And there's no issue with it. I can just keep doing it, right? What happens though when I decide, well, I own a McDonald's, but let's try selling tacos at the McDonald's, right? So I still have this thing, but now I have this weird thing that sometimes maybe turns into money, but really it takes a lot of time. This is not scalable. This is not how we invest. Okay, this is how people buy 1 or 2 duplexes or fourplexes and then they get stuck. And then they never buy anything again. And then they sit there managing their little 1 or 2 duplexes and go to all of the real estate meetings in the world and never make another move. Guess what? I own no duplexes. I own no fourplexes. I only do this. Okay, I'm about to do this again next week. Guess how much time it's going to take? I'm going to send some paperwork and then wire a check and then I'm going to get paid next month. That's it. Okay, now the purpose of this I'm going to go into here is to save 40% of our income. We have this thing called the 40% rule. Okay, the 40% rule means that we save 40% of our gross income. Gross means before taxes. So before I pay any taxes, I save 40%. Most of us look at that and we're like, man, I can't do that. But we just talked about a few weeks ago, well, you could if you paid off your debt. You could if you saved more money on stuff. You could if you reduced your taxes. You could if you weren't paying interest to banks. You could if you weren't paying out the ears through health insurance. Okay. The other thing you could do is you could have money showing up every month that you didn't trade your time for. That money you won't miss. That money can get reinvested right off the top. So if I take my 50 grand and I turn that into $500 a month, that $500 a month is now going to come back next month. And I didn't used to have it. So I'm fine saving all of it because I'm not going to miss it. I never had it before. So part of getting to the 40% rule is investing. The purpose of investing is to be able to save 40% passively and then be able to replace my expenses, right? Because at some point I want to be totally financially free, right? So let's just say with that 50,000, if I'm making, let's say 5 grand a month at my job, easy math on this, 5 grand a month at my job. Let's say that's what I'm making right now. That means that if I could get 5 grand a month from these deals, I don't have to work anymore. Well, if I'm making $500 per deal, that means I only need 10 deals and then I have my 5,000 a month. Well, if each deal is 50,000, that means I only need 50,000 times 10 deals. That's $500,000 paying me 5 grand a month that I don't trade time for. I don't have tenants. I don't have to go collect bills. I'm not going to have the property break. I'm not going to have COVID-19 happen. And then do you know what happens in COVID-19 with this kind of stuff? All of the landlords couldn't collect rent. If you had a private mortgage, you could say, dude, you better pay your bills or I'm putting you on the street. There's no eviction process here. This is called a foreclosure on a private mortgage. You're going to pay me. And if you don't, you can find a new place to live. That sucks, but they should have thought about that before you couldn't pay your bills. Like that's the control you have. Versus if I had my duplex and my tenants don't pay, and then there's this government rule that says I can't collect on them in the first place, that's no longer an investment. That's no longer a profitable activity. I don't want any part in that, right? So it's so important, like on this step, guys, like get there when you're solvent. Don't rush this. Okay, get the debt taken care of, like no debt, all of that's gone because now you have all your income back. Self-finance your own vehicle. Do the house on the HELOC like I'm talking about. Okay, build up your gold, build up your sacred account, build up your real estate in the house, and then borrow against those assets to go do these deals. And then just keep repeating that action and saving the cash flow. That's what we say compounding cash flow. Keep saving the cash flow until you're saving 40% of your gross income. Okay, and you're going to keep stacking and stacking and stacking. And eventually you get to a point where you have as much coming in as your income. And then it's like, wow, I don't have to go to work today if I don't want to. Okay, that's financial freedom. That's I don't have to trade time for money, right? Because when you understand all of this stuff, you realize that money is a mechanism and it's something that I can use or it can use me. For the average person, money uses us. Okay, we have to work or we can't pay the bills. That's slavery. There's no other way to put that. That's slavery. And so if you want to get out of slavery, you got to do the right way. You have to be smart. Like think of this as breaking out of like a high security prison. Okay, I have to be strategic. I have to make sure I have my plan laid out. I have to have backup. I can't have things that are holding me back. I can't have people that are going to rat me out. I can't have the hole in the fence not be there when I need it. Like all of this has to be set up correctly so I can break out. Okay, so this is really what I wanted to cover tonight, guys. And like the purpose behind this is financial freedom. And I want you to realize that this is just the start. Like on this, we covered phase 0 and phase 1 and phase 2. This is the first part of the plan where we are actually building. We are actually building and making forward progress. Everything else was either getting stable or taking care of the past. Okay, we don't want to just stay where we stable and take care of the past and then not build anything. And so that's really like the focus of this is like this is the first one. If you do the first deal and you've made $500 a month, we can all agree that I am not wealthy on $500 a month. I have to be able to keep doing this. I have to be able to keep doing this and keep doing this and keep doing this. And I can't keep doing this if I do activities that I can't repeat or I buy investments that make me lose progress because now I'm back worse than where I started. So all of this is very precise. Like I said, like I studied this stuff and I looked at what do the wealthy people actually do? What do the wealthy people actually do? They're not out there buying their neighbor's fourplex. That's not what wealthy people do. Okay, that's what your realtor does. That's not what wealthy people do. They're not putting their money in the stock market and hoping that their S&P fund recoils and comes back in a V-shaped correction after the economy crashed. That's not what wealthy people do. The stuff that I'm sharing with you is exactly what they do. So what I want to do here, guys, I want to open this up to some questions. I will hit Instagram first, just because Instagram expires after a certain amount of time. So I want to make sure that we're able to cover all the questions there. And then I'll hit Facebook and Zoom. All right, so let's see what we got here for questions on Instagram. So again, phase 3, we're talking about investing and building wealth. So if you have questions on anything we've covered, go ahead and throw those down in the comments. I will answer those now. Let's see, Instagram, what kind of questions do we have here? If you guys have questions on investing, on how to save more of your money with the goal being saving 40%, we have someone that's in 8th grade watching, learning about money. That's freaking awesome. If you're still on, like, congratulations. That's so cool that you're that age learning about this stuff. Let's see here. James, good to see you. So someone asked, I have a question. How are you so smart? Thank you. But really, like I said at the very beginning of this, like if you're watching this and you're like, man, this guy's so smart, I can't understand it. Like this is an indicator that there might be words you don't understand. And just like how I got to where I'm at, go look those up. Get a dictionary, figure out what was it that he said. What was it he said that I didn't get? Go look those words up and make sure you understand them and you can actually apply them. I got where I'm at by studying and continuing to grow. When I could have had better things to do on Friday night, I could have done something else. Just like you, I was learning. All right, I'm not seeing any more questions on Instagram. Let's check Facebook here. Okay, good to see everyone on Facebook as well. We have Liam has a question. He said he just leased a car and he's wondering if that's the wrong move. Liam, so I leased my first vehicle as well. And then after, that was before I knew about the sacred account. Once I learned about the sacred account and I learned about it's something called a Section 179, which you should be doing, you're self-employed. I'm never going to lease a vehicle again because now I know how to do that. So I wouldn't say it's the wrong move because at the time it's probably the data you had and it is tax deductible to pay your lease every month. But a better move is to self-finance it through the sacred account, take the tax deduction on the 179 and then make your car payment to yourself instead. There might be a way you can structure that with your lease contract. We could find that out, I bet. Liam says we need to chat ASAP. Liam, we do. I've still got your credit report. We need to go over that. Uh, Reggie, good to see you, man. Um, all right, I think that's all the questions on Facebook. Let me see what we have on Zoom. Don wants to know, is all of what we covered tonight covered in my book? A good chunk of it is, Don. We also have a program called Wealth Dynamics University, and all of this is covered there. So I would say if you're not already on the book, get the book. That'll get shipped out so you can read that, but also go to membership.jerryfetta.com. If you go to membership.jerryfetta.com, and this is for all of you guys, you can get a free 2-week membership to Wealth Dynamics University, and you'll have all this content at your hands. You can go learn about it. It's for free. If you want to keep the subscription after that, I think it's like $600 for the year and you're covered. And we also help you with your financial planning. But that's a great place for you to start. Keith, how soon will Wealth Dynamics be acquiring a precious metals brokerage? Keith, we already own a precious metals brokerage, man. Sorry that you didn't know that. We do own a precious metals brokerage, so you can buy gold and silver through us. We have some of the best pricing and service out there. We will actually be launching an e-commerce site pretty soon as well, so you'll be able to buy online. Jennifer says, once I have 50K, how do I find people that have deals looking to borrow that are credible? So Jennifer, that's actually something Wealth Dynamics helps with. So we vet all of these people and we say, here are the places that I invest and you can invest in those same places. You could go find your own people. It is time and money and work to do that. So we have like vendors that help with that specifically. And they have like my top one I'm thinking of, they've been in the game doing this for 40 years and they pay 8, 10, 12% returns and they've never missed a payment. They've never defaulted. All of their stuff is legit. I personally use them. And so when you're at that point, you just let us know and then we connect you with them. I'm a private placement broker, get you all the data so that you're able to invest as well. And then you're covered there. So that's something we can talk about. Let's see if we got any other questions here. All right, guys, I think that that's all of our questions. If you have any more, drop them in the comments really quickly. If we don't have any more come up here soon, we'll go ahead and tune out for the night. But again, guys, like wrapping up, wrapping up here, like get to phase 3. For sure, get to phase 3. Get to the point where you can invest and earn passive income. That's a milestone in your life if you can get there. Okay, that's hope. That's literally like there's a semblance and a chance that I don't have to trade time for money anymore. But self-finance your vehicle first. Do the all-in-one loan, self-finance your house first. Get your 6 months in reserves and be solvent first. Get out of debt first. Understand money first. Earn more than you spend first. Those are all prerequisites. And then when you get there, don't fumble the ball in the end zone by investing in something that's not scalable. Okay, that's my ending message. So if there's any more questions, you guys can hit me up in the direct messages. You can shoot me an email as well. Again, if you're watching this and you would like to get more info on what we do, what my company does, you can get a free copy of my book if you go to Fetta.com. We'll ship that out to you. You can also get a free trial on Wealth Dynamics University if you go to membership.jerryfetta.com. 2-week free trial. You can check out our program. I will go ahead and tune out here and we will call it a night. I will see you guys back next week, same time. Thank you all for joining. Again, congratulations if you spent your Friday night watching this. That's freaking awesome. I'm proud of you for that. And I will talk to you next week. All right, Zoom, we're going to go ahead and log out here. And I think that's all the questions. Jennifer, you're very welcome. Let me know if you have any questions on this stuff and we can definitely set up a call and talk more. But I will see you all next week.